Welcome to our comprehensive euro to pound sterling analysis report covering the period from September 22 to 27, 2025. In this presentation, we'll examine the current state of the euro against the British pound, analyzing key technical indicators, market developments, and central bank decisions that have influenced this important currency pair over the past week. Our analysis draws from multiple trusted sources including TradingView, InvestingLive, Action Forex, Forex.com, and Daily Forex to provide you with a well-rounded perspective on market conditions and future outlook. We'll explore both short-term trading opportunities within the current range-bound market as well as medium-term projections for the next 1 to 3 months, complete with risk assessment and actionable trading recommendations. Let's begin by examining the technical landscape of euro to pound sterling. Looking at the technical picture for euro to pound sterling, we can see that the pair closed at 0.87312 on September 26, showing a slight daily decline of 0.13%. Despite this minor pullback, the pair has maintained a positive trajectory over longer time frames, with a monthly gain of 1.25% and an impressive year-to-date performance of 5.5%. The technical indicators are sending mixed but generally bullish signals. While oscillators remain neutral with 4 sell indicators against just 1 buy indicator, the moving averages tell a more decisive story with 13 buy signals dominating the outlook. On the chart, we can observe that euro to pound sterling continues to trade within a well-defined range. The current price sits comfortably above the 50-day exponential moving average, which is providing dynamic support around the 0.8642 level. This technical setup suggests that traders should be looking for short-term opportunities within this range while remaining alert to potential breakout scenarios in either direction. The market dynamics for euro to pound sterling this week have been heavily influenced by several key events. Most notably, the Bank of England maintained its bank rate at 4% with a 7-2 vote on September 18. This decision was largely expected, but the split vote indicates some internal pressure for rate cuts. Meanwhile, the ECB's consumer survey released on September 26 showed inflation expectations edging higher, while growth outlook remains weak. This contrast between inflation concerns and growth worries creates a complex backdrop for ECB policy decisions. New tariff announcements have also introduced uncertainty into global markets, indirectly affecting currency pairs including euro to pound sterling through shifts in risk sentiment. Looking at the central bank policies side by side, we can see the BoE maintaining a cautious stance with its next meeting scheduled for November 6, while the ECB appears increasingly concerned about persistent inflation despite weak growth signals. This policy divergence will likely continue to be a key driver for euro to pound sterling in the coming weeks. Christopher Lewis, senior analyst at Daily Forex, provides valuable insights into the euro to pound sterling pair's behavior. His analysis confirms that the market remains stuck in a range between 0.8600 and 0.8750, with the 50-day EMA at 0.8642 providing reliable support. Lewis notes that while the market is grinding higher, it currently lacks the momentum needed for a significant breakout. This creates an environment ideal for short-term, back-and-forth trading opportunities within the established range. His triangulation analysis reveals that both the euro and British pound are performing similarly against the US dollar, creating a state of stasis in the euro to pound sterling cross rate. This explains the range-bound nature of the pair. Looking at the key technical levels, we can identify strong support at the range bottom of 0.8600 and the 50-day EMA at 0.8642. On the upside, resistance is firmly established at the range top of 0.8750 and the 52-week high of 0.8800. These levels provide clear entry and exit points for range trading strategies. Let's synthesize the key elements affecting euro to pound sterling in our comprehensive analysis. Looking at the chart, we can see the consolidation pattern that has developed between 0.8600 and 0.8750. The technical indicators confirm what we're seeing visually, a market that's leaning bullish but lacks decisive momentum for a breakout. 4 major news events have shaped the pair's movement this week. First, the Bank of England's decision to hold rates at 4% with a 7-2 vote split has created some uncertainty around the pound's future direction. Second, the ECB's consumer survey showing rising inflation expectations despite weak growth outlook creates a complex backdrop for the euro. Third, the US PCE inflation report showing cooling inflation fears has influenced global market sentiment. Fourth, new tariff announcements have introduced uncertainty into global markets, affecting currency pairs including euro to pound sterling. The current price of 0.87312 sits well above the 52-week low of 0.8300 but remains below the 52-week high of 0.8800, suggesting room for movement in either direction depending on upcoming catalysts. Based on our analysis, we've developed two clear trading strategies for the short term, covering both bullish and bearish scenarios. For our long strategy, we recommend looking for entry points in the 0.8642 to 0.8650 zone, which aligns with the 50-day EMA support. Target the upper range resistance at 0.8750, with a stop-loss placed below the lower range support at 0.8600. This setup offers a favorable risk-reward ratio of approximately 1 minute and 1.5 seconds. For our short strategy, consider selling at the resistance level of 0.8750, targeting a move back to the mid-range level of 0.8650. Place your stop-loss above the 52-week high at 0.8800, giving you a risk-reward ratio of about 1 to 2. As you implement these strategies, keep a close eye on several key events that could impact the pair. These include speeches from ECB and BO officials, upcoming economic data releases from both the UK and Eurozone, and any developments in global geopolitical tensions that could affect market risk sentiment. Looking beyond the short-term horizon to the next 1 to 3 months, we've identified two primary scenarios for euro to pound sterling with their respective probabilities and targets. Our bullish scenario, which we assign a 60% probability, would see euro to pound sterling breaking above the current range and targeting the 0.8800 to 0.8900 zone. This scenario would likely unfold if the ECB maintains a more hawkish stance than the BO. UK economic data shows continued weakness, and the BO signals potential rate cuts in upcoming meetings. The strategy for this bullish outlook would be to buy on dips toward the 0.8642 to 0.8650 support zone with a longer-term target of 0.8800 to 0.8900. Our bearish scenario, with a 40% probability, would see euro to pound sterling breaking below support and targeting the 0.8500 to 0.8550 range. This would likely occur if UK economic data improves significantly, the ECB adopts a more dovish stance, or the BO signals a pause in its rate-cutting cycle. For this bearish scenario, the strategy would be to sell on rallies toward the 0.8750 resistance level with a target of 0.8500 to 0.8550. No trading analysis would be complete without a thorough examination of the risks that could impact our euro to pound sterling outlook. Let's break these down into upside and downside risks. For upside risks that could push euro to pound sterling higher, we're watching three key factors. First, a more hawkish than expected stance from the ECB could strengthen the euro. Second, continued or worsening weakness in UK economic data could pressure the pound lower. And third, clear signals of upcoming rate cuts from the BO could weaken the pound against the euro. On the downside, risks that could drive euro to pound sterling lower include a significant deterioration in Eurozone economic data that could weaken the euro, stronger than expected UK economic data that could strengthen the pound, and a shift to a more dovish stance by the ECB that could weaken the euro against the pound. We're also monitoring several geopolitical risks, including potential escalation of trade tensions following new tariff announcements, signs of political instability in major Eurozone countries, and ongoing issues related to Brexit implementation that could affect UK-EU relations. Our risk impact assessment radar chart shows that ECB hawkishness and BO rate cut signals currently pose the highest potential impact on the pair. To conclude our euro to pound sterling analysis, let's review our key trading discipline recommendations that will help you navigate this market effectively. First, always implement strict stop losses to limit potential losses. We recommend that single trade risk should not exceed 2% of your trading account to maintain proper risk management. Second, adjust your position size based on your personal risk tolerance and the distance to your stop loss. This ensures consistent risk exposure across different trading setups. Third, stay informed about economic data releases and central bank communications that could impact the euro to pound sterling pair. The policy divergence between the ECB and BO remains a key driver for this currency pair. Fourth, given the current range-bound nature of the market, consider a range trading strategy, buying near support and selling near resistance. The clear technical levels we've identified provide excellent entry and exit points. Our overall outlook for euro to pound sterling remains cautiously bullish with a 60% probability of an upside move toward the 0.8800 to 0.8900 range over the next 1 to 3 months, but we recommend staying alert to the risk factors we've discussed.